Imagine a stock that was flying high at nearly $30 just a month ago, and today it is scraping the floor at barely over $3.
Yeah, it's a completely wild drop.
Right. So is this the buying opportunity, a lifetime, or, a trap that will swallow your portfolio whole? Today's deep dive is all about Battalion Oil Corporation, trading under BTL. We're looking at a stock generating just massive buzz, conflicting signals, and extreme volatility.
It really is the ultimate market Rorschach test.
Exactly. And because market sentiment and, well, retail psychology plays such a huge role in today's topic, we really want to hear directly from you. If you're tuning into this deep dive on YouTube, you absolutely must like the video, subscribe to the channel, and leave your feedback in the comments. Are you seeing a trap or a turnaround?
But before we tear into the balance sheets, I need to establish some ground rules.
Right.
We're going to dissect the financials, the technicals, the analyst ratings, but we're looking purely at the data from our sources.
Right.
So this is an intellectual exploration of a really fascinating market scenario. It is completely devoid of financial advice. We're just taking the dashboard apart to see how it works.
No financial advice. Got it. So, setting the stage. As of the April 17th, 2026 close, Battalion ended at $3.06. That is a brutal 14.29% drop in just one day.
It's a massive hit.
Okay, let's unpack this because to understand how a stock loses 89% of its value from a March 2026 peak of $29.70, we really have to look at who is running for the exits.
You definitely do.
I mean, looking at this 52-week range from $1 all the way up to almost 30 and back down, it's like a terrifying roller coaster. And when a stock plummets this fast, you immediately look at the insiders running the company, right?
Yeah, exactly. Because what's fascinating here is the sheer volume of insider activity. Over the past year, insiders bought about $11.2 million worth of shares.
Okay, that sounds positive.
Well, wait, they bought $11.2 million, but they sold a massive $22.6 million.
Oh, wow.
Double. And this was across 100 different transactions. It's not just one guy buying a boat. It's a systemic pattern of executives taking guaranteed cash instead of holding their own equity during a crash.
Yeah, that's not exactly a vote of confidence.
Not at all. And it's not just insiders jumping ship, The short sellers are absolutely circling.
Smelling blood in the water.
Precisely. We're looking at 2.79 million shares sold short as of March 31st, 2026. That represents roughly 17.45% of the entire float. So institutional market sentiment is highly fearful and aggressively bearish.
Wow, 17%. So to understand why insiders and short sellers are so, pessimistic, we need to look under the hood. Let's look at the company's actual bank account and balance sheet.
Right, because the fiscal year 2025 income statement is pretty grim.
Yeah.
Total revenue was $166.04 million.
Which is that a drop?
Yeah, it's a 14.6% decrease year over year. And net income to common stockholders, that was a painful loss of $36.83 million.
Yikes. So they're losing like $2.24 per share.
Exactly. Furthermore, their trailing 12-month free cash flow is negative $33.68 million. They are just bleeding cash.
Okay, wait, I want to push back on that a little bit because looking at the balance sheet, the company has $28 million in total cash right now. So isn't that a decent cushion? I mean, $28 million in the bank sounds like they can survive for a bit.
Well, it sounds great until you look at the debt. They have $203.5 million in total debt.
Oh.
Yeah, leading to a net debt-to-equity ratio of 90.7%.
Yeah.
And it gets worse when you look at the immediate timeline.
How so? Their
Their short-term assets, which sit at $57.2 million, literally do not cover their short-term liabilities, which are $63.6 million.
So the bills due right now are bigger than the cash they can access right now.
Exactly. They are operating in a deficit. Based on recent figures, Battalion Oil has an estimated cash runway of only about 9 months.
9 months. That's like a pilot flying a plane that is actively running out of fuel and they can see the gauge hitting empty.
That's a perfect analogy.
So we know the fundamental why everyone is panicking. Let's pivot to the technical where. What are the charts telling day traders right now?
The charts are just as brutal. The stock is in a bearish falling channel. It recently issued a clear sell signal from a pivot top point.
And what about the moving averages?
Well, the stock is trapped well below its 5-day simple moving average of $3.09. It's below its 50-day at $3.41 and its 100-day at $4.83.
So across the board, it's just bad.
It is a strong sell signal across the board, yes. Yeah. Every time Horizon is underwater.
Okay, so what does this all mean for the momentum indicators? I mean, the MACD and the RSI. For the listener who might be looking for, I don't know, a dead cat bounce.
The MACD is confirming the negative trend. It moved from negative 0.11 to negative 0.38. So the downward velocity is actually accelerating.
Oh, man. And the RSI?
The 14-day RSI sits right between 36.3 and 37.9.
Which means it's oversold.
It means it's neutral to slightly oversold, but it still leans toward a sell signal. It hasn't quite hit that absolute rock bottom capitulation level yet. There's mathematically still room to fall.
So if it keeps falling, where is the floor?
Support lies at $2.96 and then again at $2.90.
And if a miracle happens?
If a miracle bounce occurs, immediate resistance is at $3.39. But there's a massive, massive hurdle up at $6.80.
Okay, but this brings up a huge contradiction. If the financials are bleeding out and the charts are completely broken, why are people still talking about buying this stock?
That is the great debate right now. Man versus machine.
Right, because the AI valuation models are screaming strong sell due to high volatility and deteriorating fundamentals.
They absolutely hate the stock.
But then you have human analysts, and their 12-month average price forecast is an astronomical $24.48. How is that even possible?
This raises an important question, right?
Yeah.
Because the analyst consensus is technically a hold. We've got 3 hold ratings, 1 sell, and 2 strong sells.
So no one is actually saying buy.
Nobody. So how can a stock with a hold or sell rating have a price target implying nearly a 700% speculative upside?
Right, let's look at the bull case then. What is the recovery scenario here?
Well, there are a couple of silver linings. Battalion completed a $60.1 million West Quito asset sale.
Okay, so selling off parts to survive.
Yes, specifically to improve liquidity and pay down $40 million in debt.
That makes sense. And there's also a new long-term gas treating agreement in Monument Draw, right? I read that allows shut-in production to finally resume.
That's the big hope. If they can get that production back online, revenue starts flowing, and maybe they can chip away at the debt.
Okay, so that's the bull case. But what's the bear case? The continuation lower.
The bear case is just the harsh reality of their operations. Their acid gas injection facility, the AGI, has been out of service since August 2025.
Oh, wait, since August?
Yeah. And in this industry, if your AGI facility is down, you can't process the toxic byproducts, which means you face severe production curtailments.
You literally have to turn the wells off.
Exactly. So this broken facility, combined with the crushing debt and negative cash flow we talked about, it forms a classic value trap.
A value trap. Okay, here's where it gets really interesting for the average person watching this. I call it the retail trap.
Oh, absolutely.
Retail traders open their apps. They see a stock that was $29.70 a month ago. They see it at $3.06 today. And they assume it just has to go back up.
Yeah, it looks like a massive discount.
Right. Can you explain why this anchoring bias is so dangerous for the listener?
Because anchoring bias makes you fixate on that past high number. But the market doesn't care what the price used to be. The current price of $3 is reflecting the massive debt, the broken facilities, and that 9-month cash clock.
It's not a discount if the company goes bankrupt.
Exactly. If the cash runs out, the stock goes to zero. It doesn't matter if it was at $30 last month.
So, having laid out both sides, what is the actual outlook for someone watching this unfold? Let's start with the short term.
Short term, expect continued weakness. In the coming days and weeks, the stock is going to be searching for a new bottom pivot. The momentum is just heavily downward.
And long term, can they pull out of the nosedive?
Long-term survival depends entirely on 2 things. First, they have to maximize returns from the contiguous acreage in Monument Draw. They have to get that operational.
And the second thing?
They absolutely must successfully raise capital. Specifically, there is a crucial $15 million private placement they are trying to execute.
$15 million. So if they don't get that private placement, the 9-month clock just runs out.
That's the reality. It all hinges on that cash injection.
Wow. Okay, let's recap this wild duality of Battalion Oil. We have a company with a 9-month cash runway, broken technicals, fighting to survive through asset sales and capital raises,
Hmm.
but all while dangling this tantalizing $24.48 average price target that just keeps retail investors hooked.
If we connect this to the bigger picture, it's a huge lesson. Turnaround plays are mathematically the riskiest maneuvers in the market. You are betting against the prevailing current.
Right.
And again, this deep dive is for educational purposes only, not financial advice.
Absolutely. Which leaves us with a final lingering question to mull over. When a stock crashes 89% in a month, the market is pricing in near certain doom.
Yep. The algorithms say it's over.
But if management manages to pull off this $15 million private placement and get production fully back online, are the algorithms missing a historic turnaround, or is the $24 price target just a ghost from a company that no longer exists?